What's up everyone, this is Tony with Journey Crypto. Welcome back to another video. So I know I just put out a video last night, but this is actually a really important topic. Crypto is currently boycotting Jpmorgan today. There's some manipulation proof here as well. I'm seeing a lot of misinformation also, so I quickly wanted to do a video on this topic. Jpmorgan facing furious crypto boycott over Bitcoin debanking claims. So they sold $134 million of Strategy's master stock, and that's for an important reason here. I found this post going over this a couple days ago. The real reason behind the October 10th crypto crash is finally out. This is pretty interesting. MSCI quietly dropped a major update on October 10th. On the same evening the crash began, MSCI released a consultation note that almost nobody in crypto paid attention to, stating they are reviewing how to classify companies whose main business involves accumulating Bitcoin or digital assets. Key proposal: of digital assets equal 50% or more of a company's total assets, and the company's operating activity resembles a digital asset treasury. The company can be excluded from SEI global indexes. This directly puts several Bitcoin-heavy companies at risk, especially micro. So why does this matter? If MSCI excludes these companies, index funds are forced to sell. They don't get a choice. They're literally forced institutional selling. MicroStrategy becomes a primary target. When Master dumps, Bitcoin reacts immediately. If the stock shows weakness, confidence drops, Bitcoin correlation increases, retail panic accelerates, liquidation starts hitting, Bitcoin falls harder. How this connects to the October 10th crash, there's multiple reasons here, but when MSCI's note dropped, it added a new type of structural risk that traders did not expect. The fear was simple: if Master or similar companies get removed from MSCI, large funds will be forced to sell. What happens to Bitcoin then? This fear hit right into an already stressed market. The result, one of the biggest liquidation waves in crypto history. So there's another layer to this. Jpmorgan's timing 3 days ago. Jpmorgan published a bearish report highlighting the same MSCI risks. While Master stock was weak, Bitcoin was weak, liquidity was thin, sentiment was fragile, causing a 14% dump in a few days. And if you know Jpmorgan's history, you know the pattern. They speak bearish when prices are weak. They accumulate assets when retail is scared. They publish bullish notes near the top. This is standard Wall Street behavior. Is Jpmorgan manipulating the market? Not illegally, but strategically, yes. Just going over this. They've done it with metals. They've done it with bonds. They are doing it with Bitcoin. This is not a cartel. This is Wall Street strategy. Now the plot twist: Michael Saylor responds publicly right when MSCI fears started dominating headlines. Saylor dropped a detailed clarification. MicroStrategy is not a fund, not a trust, not a holding company. It is a publicly traded operating company with a $500 million software business and a Bitcoin-based treasury strategy. So Michael Saylor's message was clear: we are not passive holders, we are builders, we are innovating. Index labels do not define us. So what does all this mean for the markets? October 10th crash was not random. Forced selling fear created liquidity stress. Jpmorgan amplified the fear, going even further, which we're going to cover. Saylor finally cleared the air. His statement explained why MicroStrategy is fundamentally different from what MSCI is describing. Regardless though, uncertainty remains until this is cleared up. The final MSCI decision comes on January 15th. Policy goes into effect February 2026. So Jpmorgan is spreading fear. They did dump their strategy stock, and they're also making claims here. Jpmorgan warned that the company may be removed from major stock indexes like the MSCI USA index. Jpmorgan argues that Strategy's premium has collapsed, its balance sheet risk has surged, and its structure now resembles a leveraged Bitcoin wrapper rather than a diversified operating company. So they're claiming billions are going to be dumped for the MicroStrategy stock because of this. But then Michael Saylor insisted Jpmorgan is misrepresenting the company. He said Strategy is not a fund or a passive Bitcoin holder, but an operating software firm with a Bitcoin-powered structured finance strategy. In 2025 alone, the company launched more than 7.7 billion worth of digital credit instruments across products. So not only that, but Jack Mallers made a statement saying Jpmorgan Chase threw me out of the bank. Strike CEO says his account was terminated without any detailed explanation. They sent a letter to him here and he framed it. So a lot of people are boycotting now. We had Grant Cardone, billionaire Grant Cardone just canceled his Chase account and withdrew all his money. More details on this Block News article. So Jpmorgan warned strategy could face up to 8.8 billion in index related outflows, sparking community backlash. Grant Cardone, Max Kaiser, and others accused the bank of targeting Master and fueling panic. Some traders say a GameStop style retail squeeze could emerge if sentiment escalates. So we also have Senator Cynthia Lummis slamming Jpmorgan for its anti-crypto policies. Policies like Jpmorgan's undermine confidence in traditional banks and send the digital asset industry overseas. So this is going viral right now overall, all of this happening. There's some misinformation though as well, but crypto market is actually looking up right now. Even since starting to make this video, we're up around another 1%. Now above $89,000. Bitcoin or Ethereum is testing 3,000 again. We have XRP up 9.5%. A lot of altcoins up a few percent across the board. So we also have Polymarket's Fed decision in December continuing to climb. We talked about this yesterday as well. 25 BPS decrease is now at 84%. Yesterday jumped up to 70%. So this is looking very likely to get that 25 BPS decrease in December, and then on top of QT ending. So this actually dropped with the market crash as low as 22%, but then quickly recovering here, and the market's going up with this now. So things are looking up right now, but a slight recovery is always expected after a massive crash like that. We're still at 12 on the fear and greed index here, so there's still extreme fear overall. But like I said, we do have that 25 BPS decrease coming up, and then QT ending. Some pretty bullish things for the short term here in the next few weeks. We'll see how the market reacts to that. I do think things are going to be continuing to look up though. I do think a recovery to $95,000 to $100,000 Bitcoin is pretty likely here in December. So this is interesting. This stuff is happening with Jpmorgan because they just flipped their stance and kind of went positive on crypto, even revealing they bought a few $100 million of the Bitcoin ETFs. So a few $100 million to Jpmorgan is practically nothing. I really do think they're trying to increase their exposure into the multi-billions. We'll see in the next couple months here if that's revealed. They acquired a ton of Bitcoin ETFs and Bitcoin throughout this market crash. That's going to be very telling. So that's pretty much it for this video. I just wanted to give you guys an update on what's going on with this, since there's some misinformation and just information spread out everywhere. But if you guys want breaking news on this type of stuff as it's happening, follow Block News on X. You could go to blocknews.com as well for more in-depth articles on everything happening in the space. So that's it for this video. Thank you guys so much for watching, and I'll see you guys in the next one.